Hello, everybody, and welcome to the next episode of the Oreninc exclusive interview series with Paul Harris and Mickey Fulp, our Mercenary Geologist, joining us today via Skype. Hi, Mickey. Hi, Paul.
Hi, guys.
Hi, hi, Mickey.
Hi. Thanks again for taking the time today. I know everybody's really busy getting ready for site visits for the summer, so I do appreciate your time. And we've discussed a couple topics we want to touch on today. And I'll get started right away, actually, because last night we received note that Endeavour Mining is buying Avnel Gold. It's a Mali gold explorer, gold developer. In my opinion, almost the last shovel-ready open-pit project in the world was just bought. For me, that has significant meaning because I'm of the opinion that we'll see a bull market in the exploration space at least for the next 2 to 3, maybe even 4 years, just because the shovel-ready projects are gone. And I think, Paul, we've discussed this in the past as well, and I'd like to hear your opinion on that and whether you see any other projects that are somewhat shovel-ready right now.
Yes, well, I recently did a bit of a study looking at projects in the Americas, particularly focusing on gold, and drew up a list, if you like, of about 150 projects that were at least PEA stage and more advanced, with about at least a million ounces of resources. But you very quickly cut that list down when you take out jurisdictions, the more complicated jurisdictions, and then social issues and legal issues and grade and this and that. So they're, once I've done a very sort of rudimentary suck of the thumb analysis, there was only about sort of 10 projects that look viable at the current time, and so there's slim pickings. There's a lot of work going on. A lot of projects are being advanced to PFS and FS level, but there isn't a great deal of projects being, taking the extra step, getting funded into production. As you've seen, there's starting to be a bit of M&A activity as companies jostle for position and look to fill their pipeline. But more exploration is needed.
No, Mickey, and do you have any companies that would sort of top the list there for you?
Well, the only company that I'm aware of that is actually shovel-ready, and I probably will restrict my comments to the Americas, would be Victoria Gold. But it's been around a long time, and it's grade challenged. And I guess, as you and I have talked before, Kai, if it was that good, someone would have already made a move on it. Although, if memory serves, Kinross has a significant equity position in that company, and that's the Eagle deposit in the central Yukon.
So we can agree that a lot of work still has to be done to get some more projects shovel-ready, because I think when Kamenek was taken over, that sort of was the starting point for the M&A activity in our space over the last 12 months at least, and all of the projects that were shovel-ready have been taken off market, from in my understanding.
Yeah, well, we should also point out that Kamenek's coffee deposit is very far from shovel-ready.
That's true. That is very true.
I mean, in my mind, that's an exploration project still. But we have seen the majors and the mid-tiers start really going down the food chain and picking up earlier stage projects, some that are basically grassroots style plays.
Now, I think one of the key takeaways, I think, from this development, actually, that the majors, some of them are actually competing. They don't mind, owning 9.9% alongside another major right now.
Yeah, we'll see how all that works out. But I think it's encouraging that, it comes from two places here. There are not a lot of good advanced projects, but it also indicates a willingness of the mid-tier and major gold mining companies to walk down the food chain a bit and take on earlier stage projects, which ultimately will be of great benefit to the junior sector.
Now, Paul, do you want to put a bow around it for us?
Yeah, well, a couple of things. One, I think you also see some of the majors shuffling their portfolios to release non-core assets. We saw this the last week or so with Goldcorp doing the deal with Orla Mining on the Camino Rojo project in Mexico. And I've also heard from sort of sources in Ecuador this week that BHP Billiton's going to picking up some concessions there for exploration, very much greenfield exploration. So that's, the major miner going way to the top of the food chain to try and find something interesting.
Okay, interesting. Perfect. I'd like to go on to the next topic, and I think, Mickey, that's your forte. Is you wanted to discuss and you wanted to enlighten us on on the commodity price developments over recent months and where we're at right now.
Yeah, so the bottom came in, as we're all aware, January 20th of 2016, and gold started to move first, but we had a general commodities move up. Commodities in 2016 were the highest returning sector. And what that, in retrospect, was really driven by hedge funds piling in. And what happened is this all peaked in mid-February of this year, and the hedge funds piled out because they usually make contrarian moves. They move en masse into a sector. And what really occurred was they moved too quick into commodity space. And so from mid-February highs in all the industrial metals, in oil, gold has basically been flat since that period of time. The industrial metals have all come up significantly as the hedge funds increasingly went short. And so it's been very interesting what has happened this week. And that's all the industrial metals have bounced off their temporary 3 to 4 month bottoms, and they've all moved up significantly. As we speak right now, copper's at $2.68, zinc's at $1.25, oil's rebounded to almost $43 after dipping into the $42 range over the last couple of weeks. And really what's happened is there's been a bunch of shorts that have gotten burned in short selling, and so my take on commodities is much more bullish this week than it would have been last week.
Did you think it's a case of the spring starting to tighten ahead of the fall? We're going to see that real jump come in the fall, do you think, Mickey?
Well, it just goes to show me how fickle the speculative futures and options markets are. And I'm basically talking about commodities that are traded freely in world exchanges with derivative markets. I'm hopeful, but we've also, this is underlain by some significant supply-demand fundamental issues. Zinc inventories are at a 9-year low. Copper inventories are at a 2-year low. We see, and this is usually the low season for both those metals because everybody buys in the spring to carry them through the summer construction season. So if we would have talked last week, I would have had a much different view on the commodities markets going forward. So let's say I'm cautiously optimistic.
Interesting. Paul, since you're based in Medellin, and I have you on the phone here with us, one topic of discussion in the markets right now is what's going on around Cordoba minerals. And what have you heard? Like, why is the stock still not trading after 2 weeks? It's been halted for 2 weeks. I hear the TSX is involved. Be interested to hear some more insight on that, and put some more light on that.
Well, Cordoba put out a release a couple of weeks ago saying that it's renegotiated its deal with Robert Friedland's HPX, under which in the past HPX was funding exploration through the feasibility, with Cordoba having a carried interest, but that's gone by the wayside. Friedland's turning all his interest into direct share ownership in Cordoba Minerals, and from then on, Cordoba will be funding its own exploration. Concurrent with that, Cordoba announced a bought deal private placement at 81 cents with a full warrant, I think. And, together, both of those transactions are highly dilutive for existing shareholders. And so there's been quite a lot of pushback on that. The deal's hasn't been well received. Other newsletter writers have, called called sell on the company, on the stock, even though they really still like the project. So obviously it hasn't yet run its course because the stock is still halted. So it's still unclear whether one or both of those deals are going to continue through, whether it'll be reformatted or changed in some ways. And there isn't any information coming out of the company about that.
Yeah, they've been awfully quiet over the last couple of weeks. So do you think there's a chance that the deal might fall through? But what would the implication be there for the company, for Cordoba, if HBX wouldn't be able to merge its project holdings into the company?
Well, being cynical, it would be difficult to see that Robert Friedland won't get his way eventually. So the question is, what form will that take? I think it will happen. But as I say, that the form may change slightly, but I think a lot of people expect it to go through one way or the other.
Okay. Just as a last final question, just on that topic do you have any insight into why Robert Friedland suddenly decided to roll up his project interest into the public company?
I have my own sort of opinions, which are probably libelous, but when I spoke to Mario the day the deal was announced, he said, from his point of view, Cordoba Minerals will effectively become Robert Friedland's exploration vehicle in Latin America, which sounds good and it sounds grand, but it still doesn't sound as good as the deal that they previously had on the table, whereby this major mining entrepreneur, mining mogul, was funding its project through to feasibility. So I guess we'll have to wait and see until the dust settles.
No, okay, that's interesting. All right, thanks for that. And to sum up our podcast today, like we've done over the last couple of weeks, or last couple of podcasts here, is each of us picks a number that was significant for us since our last podcast. So it'd be great to hear yours, Mickey.
Well, mine is 53.1 million. And that's the number of shares that the Toronto Venture Exchange has traded over the last 5 days. And we have not seen volumes this low since commodities bottomed in late January and early February of 2016. Basically, sell in May and go away has morphed immediately into the summer doldrums, and that's quite unusual. No one cares.
That is true. Paul, what's your number of the week?
I'm going to stay close to home for mine with another Colombia sort of mind fuck. 46 million, which is the rights offering that Red Eagle Mining is doing to basically dig itself out of the hole that it's got into with the development and production at its San Ramon mine.
Oh, that would have been an interesting topic to discuss today as well, especially from a geologist's point of view, Mickey.
Or an engineer's point of view, and that's mining's a really tough business.
Oh, yeah. So, and to sum it up, I think my number this week is, I've talked about Avnel Gold and the takeover by Endeavour, so my number this week, and I've been calling that takeover for a while because I had that project on the top of my list, is 159 million. And that's the price Endeavour's paying for a 2 million ounce deposit in Mali with a very low all-in costs and 50% IRR based on their feasibility study. So I think they're getting a heck of a bargain, and that's why that's my number.
So that would basically be about $75 an ounce if I do my math in my head right.
Yeah, and there's some massive upside to be had with satellite deposits that haven't been, no resource has been calculated on those.
Sounds like a pretty fair price based on peer costs over the last 15 to 20 years.
Yeah, no, rumor has it that they could squeeze almost 200,000 ounces out of that project a year, and that would make Endeavour a 1.1 million ounce producer, which is also significant.
Yep. Get over that sort of critical mass, yeah.
Gentlemen, as always, thank you very much for your time. It's much appreciated. Thanks for your insights. And we'll circle back to you guys and get back to you soon with the next episode. Thank you so much.
Thank you.
Thank you, Kai. Thank you, Mickey.